Good morning. It is Sunday, July 7th, 2019, and we're taking a look at the S&P 500 as we get ready to trade July week 2. Here is our roadmap. Here is where we ended the day on Friday. With a close back above 29.90 after gapping down open well below the halfway back of the previous day's range, flushing down through the low of the previous day's range, which was also gap support, to Tuesday's close. We overshot that, traded all the way down to about 29.68, 67.97 to be exact, holding above our old time resistance point of 29.64, reversing and coming back up. This also worked really well with our 80 handle rule levels because we opened at 29.84. We flushed on down to a 29.60 handle, 29.67, 97, and then we rallied back, regained that 29.80 handle, and rallied up, made a little bit of a lower high against the previous day's range, and came down but closed above 29.90. And I think maybe there's something setting up there where we've had a close at 29.95, we close at 29.90, and as long as we keep maintaining a close, above 29.90, maybe we've got a pattern we can watch for there with closes. If we keep getting these moves where we rally up, pull back, but then rally up at the end of the day to try and close above 29.90, there's something in there because maybe there are some put sellers in there that are active and are going to be giving us an artificial floor for the time being at 29.90. Here is a look at the action on Friday. Tuesday, Wednesday, Friday of last week, looking at it from an intraday perspective. Here was a 10-minute rally at the end of the day Tuesday as we went into that final day before breaking for the holiday. The gap up open on Wednesday and just basically just a great directional day. A move all the way up from 29.77 all the way up to, closing just off of the high of the day at 29.95.82. That is our current all-time closing high, and our all-time high from that day as well, 29.95.84. So our all-time high and our all-time closing high are right there, pretty much practically on the same level. And then here you can see the gap down open, the flush down to test back into this little 10-minute move that we had made on Tuesday. Buyers came in, took us up in a very directional move, pressed us back down, but in the final 5 minutes we had another rally similar to what we had seen on Tuesday, and frankly what we had seen on Wednesday. We're seeing buyers come in at the end of the day and take us back up in the final minutes. So something, a pattern of behavior is being established to watch for. So if that changes, if we start seeing a sell program that takes us into the end of the day, maybe then we know that, the jig is up and we're probably going to be pulling back now at this point. Something that I keep posting for you guys is this target list, because we're at a point now where we're just sort of shooting at blue sky levels, quote unquote, and that means all-time highs, levels we've never printed before. So we have to do things like take percentages or pick out points on the chart that we know were important levels to take out in the first place, and maybe doubling up from another important pivot to there and seeing if that is the target that we're being shot towards. But anyways, here are our next two major targets coming up on the list. Right now we're sort of going, obviously going after 3,000, and 10% on the low that we made here in June at the very first trading day of June. This was our low for the quarter and everything as well. This 27.28, if we added 10% onto that, that would get us to 3,000.80. If we take a nice little look above that, then maybe times 2 from that June low to the takeout of the 50-day. Here's our 50-day simple moving average, and you can see that we took it out and we consolidated sideways there. And then the next level up would be 30.55 times 2 the June low to the takeout of 28.92. 28.92 revolves around what was happening here on the way down from the May all-time high, and then you can see all this hand-wringing and churning that we did here, trying to get over that level in June, and it required a gap up open to get over that level. So I think that there might be something in there, and that's kind of interesting too, that 28.92 level, and right now we're trying to hold closes above 29.90. It's like a 100-point move above that, and it sort of looks like they're trying to hold closes there. In any case, a doubling up from this low to the takeout of that level would get us to that next our next target at 30.55. If we're looking at percentages, up from the takeout of the May all-time high, that was the high that we had made over here in May on May 1st before selling off down to that June low. That high was 29.54. If we were to go plus 1% on it, plus 2% on it, we've already made it. We've already made it through the 1%, but the 2% is 30.13. That rhymes really closely with this 30.12. And then the next two would be 3% or 4%. Those kind of would encapsulate around this 30.55 idea. So that's how you use this target list, and that's the thinking of where I'm coming from on that. As far as a pullback goes, if we're going to come in and see some weakness on Monday, we would be looking for this 10-day simple moving average. This is always our first line of defense at any point when we begin to sell off. You can see here in the past how every single time we came down off of a new high, we would bounce around off of the 10-day simple moving average, and that here, once we opened below the 10-day simple moving average and then closed below it as well, that signaled the beginning of a sell-off. So that is always your best first line of defense to use in looking for whether a rally has exhausted itself or not. The one fake out being here after we made this high on June 21st. We came down, we made a single close below the 10-day, but the next day we recovered and moved up from there. So you have to have follow through, but that's always a good signal to sort of give you an idea that this is either the last chance for buyers to come in and turn things around, or it's the beginning of a much deeper sell-off. So right now our 10-day simple moving average is at 29.51 and rising. It is beginning to flatten out a little because it's now picking up this sell-off that did happen at the end of June. So, it's going to flatten out, and it's probably going to sit here for a few days down at this 29.55 area. So that sort of offers us about another 10 points lower from Friday's dip to maybe move down to if there is going to be some selling. As we get into next week. If something is said at that testimony on Tuesday that spooks the market into thinking that there's not going to be any rate cuts at all at the end of the month, or if he's not going to answer any direct questions about monetary policy and how much he will or will not raise or lower rates in that testimony, because that's discussion that has to be had with the rest of the committee. He's the chairman of the committee. He's not the ruler of the entire world. You know what I mean? So he has to work in conjunction with his committee. And here is what really got us going down on Friday. Here was the non-farm payrolls, the NFP number. It came in at 224 versus 160 the previous read. 160 was the estimate versus the previous read of 72K. So this was a huge beat, and that's what spooked the market so badly on the open on Friday, was that reading, and also the thought that there goes that 0.5 rate cut. There's no way we're getting that now. That likelihood went from, I think it was at like 30%, it went down, as I recall hearing in the background noise, to about a 10% chance on Friday. And then even the odds of the June rate cut being even just a quarter point began to wane as well once we saw that, because that's going to be their last jobs report that they're going to see before going into the next meeting. I think it's also pretty clear that there were some options bets that were going on into this rally on Wednesday. People were probably selling well in the money calls, and it would behoove them to push us lower off of the open on Friday. Based on the trading journal that I showed you and shared with you last week, that I was short 29.65 calls, and I was kind of sweating it on that. I had them since back here on the 1st, and I held them through here on the 2nd, and then I added to them on the 3rd, which is usually against my rules, but I just had the feeling that there was going to be a flush on Friday on that jobs number. And so I went for it, and I averaged up on those, and sure enough, we did get that flush. And those went down all the way, those 29.65 calls went all the way down to the 8 handle after going out at about $32 on Thursday. I mean on Tuesday into the holiday. So that's quite a trade if you caught that. If you were a player, knowing what you're doing and knowing that the market is going to flush, and you sold short 29.65 calls going into the close on Wednesday for $31 to $32, and you covered them at $8 using the $8 window into the flush down on Friday, you kept all that profit. And then we had this relentless rally back. So maybe they were long, the 29.90 calls or whatever against that. And we rallied back, sure enough, until you get those back $5 in the money. If they paid the $5 window for those, then poof, perfect. They get their money back 100% for that. And then just let the chips fall as they may for the rest of the day. I hope that made sense. If it didn't, there's a couple of blog articles that explain it more thoroughly, and I'll take your questions anytime by direct message. But in any case, what we're looking for is, to continue through our target list, and if we're going to pull back, we're looking for a hold or a break of Friday's low, and if that breaks, we're going to be looking for a test of the 10-day simple moving average and these lows that we made on on Monday and Tuesday of last week, and those lows are 29.52 to 29.55.92. So our 80 handle rule tells us if we break 29.80, we're going to test the 29.60s. If 29.60 doesn't hold, we're going to test the 29.50s. So that rhymes a lot with maybe, making a flat here that is holding above in the 29.50s, holding above the 10-day simple moving average, reversing, and then you look for the move back above 29.60, back above 29.80, and maybe if we got one more move down, then that next move up above 29.80 would be the one that gets us all the way to 3,000 and into our target list. Okay, and there was one final thing that I wanted to show you. Here were the options for this upcoming Friday as of the close, and you can see the high volume on the call side was here in the 3,000 strike and the 30.25 strike. Those are typically highly populated strikes. You can see that 10,000 were traded here, and 8,700 were traded here. And over on the put side, we really only got about 5,000 of the 29.50 puts and about 4,700 of the 29. More action going on in the calls and the puts. This doesn't necessarily mean that we're going to, that we're looking at a target of 30.25, but it does mean that people are buying those. There is some volume there. And they could be using that as a base to sell short against. As we go up into these highs, they could be selling short against that. Just as what I explained about with selling those 29.65 calls into the break for the holiday. Okay, anyway, have a great rest of your Sunday. Hope this video kind of, helped you in some way and didn't confuse you. If you are confused at all, just please direct message me. I'm going to be out for a bit today, but I'm around tonight, and I can answer questions then for sure. Have a great rest of your weekend, and see you tonight when futures open.